About CBDCs, which is like my favorite topic, not anymore, but was, and stablecoins and the myths and realities of this, because there's too much noise out there and too much misinformation. And so from my perspective, I want to explain, what I see as the reality. So what we're going to look at is sort of merging loyalty and digital currency, why the current system doesn't work, imagine. Why we use digital currency and what we're looking at, and then introducing where we could start with maybe a Madeira coin. So I've been around in blockchain for far too long. I've been talking to a few people over the last day or so. I've been doing this for 8 years. I thought blockchain would be everywhere by now, and I would be able to buy Madeira. I thought that was what was going to happen. Unfortunately, when you realize with tech, it takes a really long time. Many reasons we've talked about, regulatory, probably the main one, but also the way that tech progresses. So I'm the CEO and co-founder of Enterprise Go Digital, and we're a digital assets company, which we'll talk about in a second. CBRC is actually very interesting. It's from the book, so I wrote Commercializing Blockchain, and we changed that actually into a register of blockchain projects. So what we've done is research the projects and look at what they're doing in the reality. For me, it's very important we talk about the real use of blockchain and how we're using it on our everyday life. And I've literally been talking about that for 8 years. Digital currencies. I love this picture, this diagram. It's like old into new. So on that side, whichever that side is that you're looking, my right, your left, money. Obviously, we started with barter systems and salt and other things like that, all the way through to plastic cards, your credit card, your debit cards, to where we are today, which is electronic money, okay? We don't have digital money today. So what you have on your app on your phone, Millennium or Santander, whatever, that is electronic money. It's not digital money, and it's really important. We're talking about digital money. Digital money is cryptos, blockchain-based. So if you expand out what is digital currency, where we're going to, we've got the 3 types. So left-hand side, cryptocurrencies. I'm sure everyone in this room owns them and is probably smiling at the moment unless you bought them in the last 24 hours. So cryptocurrencies, we still believe are going to be part of the system in the future, okay? They're not going to be 95% of what we use as money. It's not the way the world works. Not in my generation, and maybe not the next, maybe in 100 years. We still, though, see cryptocurrencies having a purpose. Then we have the amazing or evil, whatever you think of central banks, the CBDCs, and they're coming, 100%. But it isn't like next year. The EU is talking, the ECB, it's definitely not next year or in 5 years. It's probably 10 years, if not longer, but they're definitely coming. The bit in the middle is really important, stable coins. So let's first of all what is a CBDC? So CBDC is the euros you have in your pocket. That's it, right? Probably, we live in Portugal. You've actually probably got a lot of notes in your pocket. Anywhere else in Europe, you don't have many notes. You don't carry a lot of cash around. So the CB non-DC is actually only like anywhere between 1% and 5% of the money. Most of it actually goes into the banking system, which is the commercial banks, Santander, Millennium, whoever you use for your banking, Nova Bank, etc. You've got to remember that the €1 that the central bank issues to the commercial banks, they go, oh, they've given me 1, I'm going to issue 10 of those, or 20, or 100, or whatever the figures they do, which is the fractional reserve banking model we live in. So important to remember when we're talking about fiat currencies, central bank money, that €1 that the central bank issued to the commercial bank is not the one that's in your pocket. It's shared out, which is why we have what could be a very big issue over the next few years with debt and the rest of what's happened. But I'm not going to talk about that bit. So a CBDC is a digital currency issued by the central bank, right? They issue it, manage it, and run it. Guess what? Christine Lagarde doesn't want to look after your wallet and doesn't want to answer you when you lose your key. Yep, she's not going to answer the phone. and neither is the Bank of Portugal. Central banks don't care about us, the people. Central banks care about the commercial banks, the stability of the country. I didn't mention before, I've spoken to over 20 central banks in the last 3 years with Ripple. So I've been around the world and understand a little bit of the way they think and what they're trying to do. And they're not trying to take over everything. They're trying to protect the way it works, the model that it works. A stablecoin is where it's interesting. Issued by commercial bank, the fractional reserve bank in Santander, can issue a stablecoin based on their electronic currency that we have today. So they can back it one for one. SocGen has just done, or is just about to, can't remember. No, they have done. They've released Euro CV, I think it's called. So that's backed by a commercial bank. So it's the same as what we have in our wallets today. Other financial institutions can issue stable coins. So USDC, sorry, EuroC for us, or USDC obviously, or USDT, all of those. Some of those are backed by treasuries, so USDT, Tether, it's famously, supposedly now the biggest buyer of treasury debt in the US. Wonder how that's going to end, good or bad, hey? There's funds that are doing gold-backed, crypto-backed, real estate, all these different things. The issue is not so much about how it's backed, something important to use, but how we're going to use it, okay? When you have a digital currency then, you can do lots with it. And it's around programmability. So it's what you can do with your cryptos today. So I don't know whether anybody works on DEX and does some random trading of random pairs on Uniswap and all those things. You can do this whole new world, lending, all these different things. Imagine doing that with your euro in a legal, regulated, thank you to all the regulators, in a legal and regulated way. There you are. Cool. Programmability is what people get stressed about, okay? And it's going to happen, okay? How it's used is then what we'll have to discuss with our banks and our central banks and our governments. But programmable money is a form of digital currency which by design allows execution of certain software code in the transaction. So it means that you can track your finances better by making it right. Once you process a transaction, it writes to a ledger, your own ledger or your own database, what's happened. Where it comes from, where it goes to, so easier balance in and out. Program the money with smart contracts and using it on DLT. That could be anything, to make automated payments, to pay back a loan automatically, to do all these good things. Automating payments, as I said, and then it's also good for reducing fraud and understanding it. Now, they're all nice things because I didn't want to talk about other things around programming, but CBDCs are going to happen. They're only going to be a small part of our money, what we have in our wallets, etc. Stable coins issued by commercial banks, as we sit here today, will be the model. Those are the things you need to worry about. Santander programming the money so that you can only use it in Continente or a coffee shop, etc. Or you can only use it for your rent, or you can't do this and that. That's where the people need to focus. And that, for me, is really important because everybody's going, CBDCs are bad, let's stop CBDCs. It's like, central banks don't care. They really don't care. And they're going to do their bit. 50 years' time, let's see. Let's hope. Central banking is a different world. But at the moment, it's going to happen this way. We're using a stablecoin solution in our project because it's the new way. It's the new money system. There's no question, in my view, after 8 years in this space, 3 years working with central banks, that without question, everything we're going to do, and I don't mean so much most of the people in this room, because we're crypto, right? So we've been using Tether and all these other stable coins, because you're like, Bitcoin's going to crash, let's put it into Tether, Oh, Bitcoin's going to the moon, let's put it back again, Which is then, as I realized again, it's like tax. That's the most painful thing. It's a tax issue when you do that, so be careful. But it's on normal people buying our teas and coffees and buying, paying for our ups things. So it's going to be the new monetary system without question. and challenge me, but hey, in 5 years' time, you can buy me a coffee and go, yeah, you were right. It opens up seamless, quick, cheap payment options. This is the programmability bit. This is cool. This is where you can do some cool stuff. So we've launched a platform, not launched, we're building the platform, which will launch next year, called the Impact Coin. Basically, we're going to be piloting with a city in Portugal, which would be great, so I need to improve my Portuguese. That's going to be interesting. But it's an all-inclusive sort of financial ecosystem and a local community. So basically, it's also helping align the ESG, sustainability, on all the circular economy. So the money is basically a token, a euro-backed token that just stays in the system. So you get the money and you can use it. Let me show you how that works. There we go. Only citizens can get this issued, by the way. Okay, so it's very important. Only the citizens get it. So KYC, AML, and all that good stuff ticked. Okay, it's issued by your city or country. You go to the coffee shop and spend $10. You get 10% back in loyalty. So as you pay, and you can pay with your Santander card if you want, and everything else, whatever you want to pay, cash, doesn't matter. €1 goes from the coffee shop into this loyalty program, okay? So on the left-hand side, as you can see, the $1 goes into the loyalty program, spins around, goes into Circle Mint, for example, if you're doing a USDC, and Circle Mint then issues a USDC. That then issues the Impact Coin, which pops into your wallet. So all of a sudden, you end up with an Impact Coin. So you spent 10, you get back 1. You as a citizen can only use that in coffee shops, to pay your taxes, to do other good things. You can't go and off-ramp that. So you can't put it back into dollars or euros. The vendor, on the other hand, you go and pay your coffee, this time with the Impact Coin. They get a choice. Do they keep it and do things in the ecosystem, which I can show you, or they can off-ramp it. For this example, I think this one goes back to USDC, but you could do it back to USD through the banking system, etc. If they do it through the digital currency, USDC, for example, it's instant. They can go and use it. If it's USD, we'd make sure that they take a bit of time, and it eventually goes so they can pay the staff on that. The impact model is really important. It's around sustainability and financial sustainability, but also sustainability of the planet and everything else. And this is probably the most important part of this. The city that we're talking to wants to incentivize people to clean the beach, to pick up their litter, to use the public transport, to do the things that you should do as a community, to help the older people, etc. The first part of it, though, is the vendor funding model. So it's the coffee shop model. So this is not paid for by other people. This is paid for by the people who join the system. Why, if you're a vendor, would you join it? Okay, so there's two reasons. First one, you're going to get more customers. Okay, people will come back because you're giving the 10% loyalty. It doesn't have to be 10%, it can be 5%, etc. So you're getting that. The second thing, the city that we're talking to is suggesting, and we're still going to go through the full process, that they will give a discount on city taxes. So when the vendor goes to pay the bills, or parking, and things like that, they get a discount. So in essence, what they gave us as 10%, they could in essence get back through the city. Second part is public policy incentives. The city we're talking to gives out millions a year in different incentives. For example, for helping young people on an apprentice scheme, they pay for their lunch, they pay for transport, etc. They also have a citizen card, I'll call it. It's for older people, and that's to give certain amounts, etc. So they can put this in. And then the third area, which is the most important area, is basically the reason why I talked about fractional reserve banking. We're basically inventing using digital currency and doing a similar but fully backed reserve banking model. So if you remember, the euro sits with Circle, for example. They mint the Euro C, that we mint, the city, mints the Impact Coin. The reserve that sits with the euros that are sat in a bank account that's Circle have minted, or any other stable coin, they can earn interest off that. And it's legal and it's acceptable and it's regulatory okay in Europe to do that at this stage. The city then has a Euro fund, the Euro C, where they can earn interest or invest it. So you've got two areas where you've got income, which you didn't have before as a city. So many people are saying to me, oh, but we've tried loyalty, we've done all these things, it doesn't work. First reason it doesn't work is you don't have a digital currency. And actually using blockchain technology for the purpose it's done. And I think Martino said this morning, one of the best and most important use cases of the blockchain is payments. Fast, cheap, quick payments. I've spent 3 years at Ripple, fast, cheap payments, cross-border payments for Ripple. So this is bringing that together with loyalty and incentives and helping us to do better things, be more engaged in the rest of it. You can also extend this out to do things like airports and other loyalty schemes and start to bring it in a very circular economy. So it's an amazing opportunity for us to sort of take on, bring in blockchain technology and sort of loyalty. And our designers did that. I didn't do that. So don't take offense, anyone from Madeira. But it's the sort of thing we could do here. Be it Madeira, be it Funchal as a city. You can become a digital currency-based economy. You can then, which is secured by euro. So this is not, it's not going to disappear. There's a euro sat in a mint that you can, in essence, get back to at any stage. The speed of it and the rest of it is the difference. The loyalty is only for residents, so therefore, the tourists, which there are, feels like millions, but there's obviously thousands a day, I'm sure, coming through. They could have a different scheme. That's a very interesting thing, because with programmability of this, you could actually issue a tourist Madeira coin, and they could then do different things and get different discounts and incentivize them to actually spend a bit more, because they don't actually spend that much when they're here. And then importantly, it's all about, this is an island, Portugal's a very sustainable, trying to be a sustainable country like many others. This is what this is helping to do. So if you go and help out the local city, go and clean the beach, go and do good things, you can get issued some of these coins, and then you can go and buy your coffee, pay your taxes, or pay your parking fines, etc. So CBDCs are going to happen. Stable coins are going to be issued by commercial banks. But what we're saying is there's alternative, which is bringing together crypto, blockchain, loyalty in a very legal, easy-to-use way. And so that's what we're looking at. We're hoping to sort of sign things off the end of this year and then be working for a launch sort of mid to end of next year for the first city, and then rolling out from there. So Madeira coin, let's start.